Hey guys, Tyler here with another trading video, and today I'm really excited because I'm going to share with you one of the trading patterns that I use that has been very successful for me, and it is called the H pattern. So I'm going to share with you what the H pattern really is, how to identify it, and I'm going to share with you 4 criteria when it comes to determining if it is a trade that you're going to want to take. Then I'm going to take you into the charts and I'm going to show you past patterns and setups and how to identify them, know what to take and what not to take. So let's go ahead and get started. Okay, I'm going to just draw this out real quick so you can get an idea. Think of an H. An H literally looks like that. Well, when we're looking at patterns in a chart, we're looking for a downtrend or an uptrend, so it's easier to do it downtrend, and we're looking for it to stop at a level, let's say 414, and then it bounces higher. We call this the profit taking section, when after a big move down, people are taking profits, and it comes back and it retests this level, and it either retests it or it breaks through. When it breaks through, it makes this H pattern. Now, if we do it the other way around, the other way would be it's coming up, it hits a key level, it bounces, and it continues on. We call this a reverse H pattern. So let's go ahead and look at some of the criteria that I need to see when I'm going to take this type of a trade. So one of the first criteria is that we see large or medium movement in one specific direction. We're going to want to see a big move, and then profit taking, and then a continuation. That's number one. Number two, we want to see 1 or 2 confirmed green or red profit taking candles that are followed by a lower low. So we want to see 2 confirmed. Confirmed means they are closed. Criteria number 3, we want to see the first H pattern, the first H pattern of the day, not the second, not the third. The first H pattern either above, below, or with no previous candles at that level for the current day. Now, this will make more sense when we're actually looking. Now, number 4 isn't a criteria, but it's a confirmation. If you're seeing the first H pattern match up with a pre-market level or a psychological key level, this makes for stronger price action. That means you could see a potential bigger move if it breaks that key level. This is a big deal because if you're seeing this pattern take place, the odds of profit from what I've looked at when I've looked at historical data is very strong. So we're gonna go back and look at historical data. Let's go ahead and check it out. So right here, we have a couple things going on. We have the market going down first, and then after it bottoms out here, it shoots up higher. Now it shoots up higher, and then it makes our first white candle. This is the profit taking candle. It goes up, it comes back down, and then it continues higher. Now, when I'm looking at a key level, I'm looking at either the top of the profit taking wick, or if I can see it line up with any pre-market price action. And in this case, it lines up with pre-market price action right here. And it lines up perfectly. The top of that profit-taking wick lines up with the body of that green candle. And then what we're looking for is, as soon as the next candle breaks through that key level of 395.6, we're going to be in the trade. We're going to be in the trade, and our next psychological level is around 396. So 396 is right here, and guess what? It stops right there. If we were to get in at 395.6 all the way up to 396, that is a 40-cent move. Now, when I went back and I did the replays on this, here's a couple things that I saw. Okay. It did test the body twice right here. You can see that white candle and then green candle both wicked right at that 395.6. We also have the closed confirmed white candle for the H pattern. We did see momentum break when it broke that 395.6, and when I looked at the data, when I looked at the live trading, it never came back down below that key level. This is a big deal because we don't want to get faked out. I hate being faked out. I've lost lots of money on fake outs. So can we see a consistent pattern with it not with it not violating this key level after it breaks through. And even if it did, our stop loss is going to be the body of this green candle right here. That is going to be our stop loss, or this candle, the breakthrough candle, turning white or turning red. As soon as that candle turns red, I would be out of that trade, because it is not going the direction we expect it to, and it would be a fake out. So we want to keep our stop losses small and our profit taking large. Let's go on and let's take a look at another one. Okay, this one is really interesting. You're going to see it come down really fast right here, and you're going to see a profit taking or an H candle right here. And then it continued on into a key level. Now, you would think that because this is a big psychological level of 410 and it goes right through that, it would make sense that you're gonna wanna take that. However, I would not be taking an H pattern into the day trading right off the open. There's way too much volatility at the beginning of the day, and it really could violate the rules that I'm looking for, or the criteria that determines if I'm going to take an H pattern or not. Now this level right here, and it comes down to actually 408.20, and this is where it stops. We see profit taking, we see another profit taking candle, and then we see this white candle, and guess what it does? It blows literally right through that key level and gives us a 20, 40, 60, 80 cents. 80 cents in one candle off of an H pattern. Here we are on December 14th. This was another H pattern. We had a strong move up, we had some profit taking, and then it continued further up in the day. The closer this H is to the opening, which, 3, 4, 5 minutes within the open, the greater chance the volatility of the opening of the market causes violations of some of my rules. And one of the rules is I don't like to see this candle violate that key level after it breaks through. Once it breaks through this key level, I want it to explode higher. Okay, now this one did violate this key level. It broke through and it came back down just a little bit. Now the key here is knowing what your stop loss is. If you wanted to play this trade, you need to have a solid stop loss. In this case, my stop loss would have been right here. It would have been right there. If it breaks through this level, you're out of the trade. Well, in this specific trade, it did not break our stop loss. It only went down a couple cents below this wick of the profit taking candle, and it continued higher. So we're looking, this would have been about a 30-cent move. That's great profit if you're trading options. So let's take a look at another example. Okay, here we are on December 19th, and we are seeing a bunch of chop. Now take a look at this. There's an H pattern right here. Look at that, nice and clean, down, profit taking, and a continuation. However, it violates one of my rules. I don't want to see any previous price action in front of this H pattern. So because we see it come down, come back up, and this profit taking, these profit taking candles are in line with other candles in the previous part of the day, this would violate one of my rules. And see what happens. This would technically be called a low a day move. It's when the candle breaks through the lowest part of the candles and it continues on. That's called a low a day break. Well, this one, we have an H pattern that you would think, oh, well, there's an H pattern and a low a day break. However, because of this chop, it even retracts above our key level or the low a day break, which violates my rules. So this is one that I would not want to take. Let's take a look at another. Okay, here we are on December 22nd. We have this key level right here of 382. This is a psychological key level, and the profit taking candle is happening right at that level. This makes for a stronger move. You'll see right here, it comes straight down, stops exactly at 382. It comes up, it continues on. At this point, we don't see an H pattern happening because we don't see a qualification for an H pattern. However, it comes back up and it closes above the 382 and it closes green. That means we're right here. That means we have a confirmed green candle and we don't have violation of the key level. Now, because of this candle right here, it's well below where I want to get in. I want to get in at this psychological key level. So as soon as it broke 382, it went down 40 cents right away, 20 cents and another 20 cents, 40 cents in that move with this green candle. Now this one did retest this 382, but it did not break the stop loss, which I would have had right here, which is only 7 cents higher, which is a very, very small stop loss compared to a 40-cent gain. So 7 cents for a loss, 40 cents for a gain. That's a 1 to 4 ratio, over a 1 to 4 ratio. That is that's great odds, and this is definitely a play that I would want to play. Okay, here we are on the 29th. We see a big move up. We see some profit taking and a continuation right there, right? We have a confirmed top wick right here with the white candle right here. It gives us a key level that we're looking for our breakout and a 381. So I have 381 key level as a potential area to take profit because it's a psychological level, but you can see that it pushed right past it. Well, rewatching the tape, it broke through that level, it hesitated right at 381 and exploded through, giving us a nice profit. Here is another example on January 3rd. This is the first H pattern below the chop. So we're seeing the chop stop right here. We come down to this key level of 383. We see a reaction, 2 green candles in this case, and we come back down. Now this move was a 50-cent move from here, the key level 383, down to 382.58. It was a 40-cent move. That's a big move. This one also was a clean break. It did not retest the 383 key level and it had momentum going down. And that brings us to today. Today I took one of these H patterns and I got a little faked out because I saw something in there that I normally haven't been seeing, yet it's still panned out, it's still moved. I just missed the move because I got out a little too early. Here is this H pattern happening right here. We see this push downwards below the chop. We see it hit a key level of, we see it hit this level right here, 402.40, and it bounced up. We saw it coming down again. This key level right here was a psychological key level of 403, and it rejected it and rejected it again, telling me that we're probably on our way down. I get it on this height, this top of this candle or the body of this candle, and I played it all the way here. Now when it got here, it bounced up and it started going the other direction and I sold. Yet it did not violate my rule of hitting my stop loss because I rode this down so far. It came back up, it didn't break the level. As soon as it broke the level, it shot down almost 50 cents. This was a huge move that I personally missed out because I got out a little early. I didn't respect my stop loss. I did respect my stop loss because I wanted to keep my profits, but I wasn't patient. So some of these, you're gonna have to wait for it to pan out. Patience wins. Patience means more money in the bank at the end of the day. So hopefully these examples are gonna help solidify the H pattern for you. Guys, if you like videos like this, please subscribe. Like the video if you think this video is helpful, and come along this trading journey. Start your own. Tell me where you're at. Would love to hear your story, and we'll see you in the next video. Take care.